Good morning. I want to express my thanks to Italy for its leadership throughout this year and to Minister Giorgetti and his team for hosting us this week. And thank you to all of you for being here. As we gather, America's strong economic performance continues to serve as a key engine for resilient global economic performance. The Biden administration has driven an historically fast and inclusive economic recovery and is now focused on driving progress on our medium and long-term economic agenda. U.S. GDP growth over the past year has been strong, our labor market is healthy, and inflation has come down significantly from its peak, though we continue to take action to address the high costs of key household expenses. In brief, the U.S. economy is in far better shape than many predicted this time last year, and I believe continued progress on inflation will benefit both the American people and the global economy. That said, we know that the recovery has been uneven across our countries and that there are risks to the global outlook. This week, the G7 will discuss financial stability, macroeconomic policies, and how to prevent geopolitical issues from derailing economic growth. The United States will seek to drive progress on three priority areas: sustainable development, ongoing conflicts, and China's industrial overcapacity. Let me first address sustainable development. As we look at a world with geopolitical uncertainty, it's essential that G7 countries work constructively with low and middle income countries and focus on how best to support them. The United States continued advancing the MDB evolution agenda at the spring meetings last month, including by joining 10 other countries to announce new resources that could enable up to $70 billion in additional lending over 10 years to support projects addressing global challenges like climate change. Our recent national security supplemental included $250 million for the Ida crisis response window, showcasing our commitment to supporting the poorest countries when they face grave challenges. And earlier this month, the United States and other donors concluded the $5 billion record 14th replenishment of the Asian Development Fund, which will incentivize addressing global and regional public goods and enable increased support to small island developing states in the Pacific and to the people of Afghanistan and Myanmar. Debt is also top of mind. For low-income countries, external debt service has risen to a level not seen in nearly 2 decades. We must continue to make progress in particular debt restructuring cases, and we must more intensively use all the tools we have to make sure countries that are making the right policy reforms have access to sustained and substantial financing flows from official bilateral creditors, private actors, and the international financial institution. These flows are critical to enabling the investments needed to achieve development and climate goals and to build a stronger global economy. I look forward to maintaining momentum this week, and I'm glad Italy invited several emerging market countries to these meetings. Turning to ongoing conflicts, as we meet this week, our price cap policy continues to restrict Russian revenues while helping keep global energy markets stable. We've imposed coordinated sanctions to further diminish Russia's revenues and restrict its access to technology and material with the United States sanctioning nearly 300 individuals and entities just this month. As Putin spends more on his senseless war and draws resources away from other productive sectors, structural weaknesses are building up in the Russian economy. But so long as Putin continues to wage war, more action is needed. The U.S. will continue to press firms and financial institutions in China and other countries to cease their support for Russia's military-industrial base, such as through supplying key inputs like optics and semiconductors. We will continue our efforts to make sure financial institutions are aware of the increased risks of sanctions since President Biden's executive order, which I believe has had a meaningful impact in disrupting military-industrial supply chains. Even Putin's spokesperson has acknowledged new difficulties. We will also use every tool at our disposal to disrupt Iran and North Korea supplying lethal aid to Russia. This week, we'll continue our close coordination with our partners in the G7 and across the European Union and discuss additional action, including to further restrict Russia's access to critical goods to support its military-industrial base and its use of the international financial system to procure them. Aid to Ukraine also remains crucial, both to enabling Ukraine's continued resistance and to protecting our and our partners and allies' national security. I'm heartened that the U.S. Congress approved over $60 billion in much-needed military, economic, and humanitarian support for Ukraine last month. And I commend the EU's progress on moving forward its €50 billion Ukraine facility. Our targeting of Russian military capacity and our support for Ukraine are together working to hold back Russia and bolster Ukraine. But securing Ukraine's position in the medium to long term requires unlocking the value of immobilized Russian sovereign assets. We support the EU's decision to utilize the windfall profits from these assets, but we must also continue our collective work on more ambitious options, considering all relevant risks and acting together. Our teams have extensively engaged on this in recent weeks, and I'm committed to working with my colleagues to present concrete options to leaders as we look toward the Apulia summit. Failure to take additional action is not an option, not for Ukraine's future and not for the stability of our own economies and the security of our peoples. The United States and our strong global coalition are currently engaged in a battle of wills with Putin. We must be resolute and united in sending a message that he cannot simply wait out the coalition. In the Middle East, we need to continue to use our economic tools to counter the Iranian regime's financing of terrorist actors, including Hezbollah, the Houthis, and Iran-aligned proxy groups in Iraq and Syria. We have recently worked with some G7 members to strengthen our coordinated efforts, including taking multiple joint sanctions actions. I urge other G7 members to join us in this effort to send a strong signal to Iran and its proxies that there will be severe consequences for its role in perpetrating violence and destabilizing the region. And we call on firms and financial institutions to cease their support to Iran through the supply and transshipment of the critical components for Iran's advanced weapons program. We're also focused on the devastating humanitarian situation in Gaza and on the increasingly dire economic conditions in both Gaza and the West Bank. We've issued public guidance and conducted outreach to humanitarian groups to make sure that U.S. sanctions do not stand in the way of legitimate humanitarian assistance to Palestinians in Gaza. And my team and I have also engaged directly with the Israeli government to urge action that would bolster the Palestinian economy and, I believe, Israel's own security. I'm particularly concerned by Israel's threats to take action that would lead to Palestinian banks being cut off from their Israeli correspondent banks. These banking channels are critical for processing transactions that enable almost $8 billion a year in imports from Israel, including electricity, water, fuel, and food, as well as facilitating almost $2 billion a year in exports on which Palestinian livelihoods depend. Israel's withholding of revenues that it collects on behalf of the Palestinian Authority also threatens stability in the West Bank. We and our partners need to do everything possible to increase humanitarian assistance to Palestinians in Gaza, to curtail violence in the West Bank, and to stabilize the West Bank's economy. Finally, we'll be focused here on China's industrial overcapacity. As I've communicated directly to my Chinese counterparts, China's macroeconomic imbalances are being aggravated by Chinese direct and indirect government support to the manufacturing sector. This is currently leading to production in some industries that significantly exceeds not only China's domestic demand, but also what the global market can bear. Without a new policy direction, including to lift Chinese demand instead of just boosting supply, this can lead to large volumes of exports at depressed prices. This is not a bilateral issue between the U.S. and China. German Chancellor Scholz raised this issue in his April trip to China, and President Macron and President von der Leyen emphasized the need for balanced trade relations with China earlier this month. The G7 has collectively recognized the need to protect our workers and businesses from unfair practices, and overcapacity threatens the viability of firms around the world, including in emerging markets. I believe it also poses a challenge to China's growth. President Biden has made clear that he will take action to stand up for American workers and companies, and last week the United States announced strategic and targeted steps in key sectors to respond to unfair trade practices by the PRC as a result of the Section 301 review. The EU and other countries are already using their authorities to investigate and consider remedies to China's actions with regard to electric vehicles, and many emerging market countries have launched anti-dumping investigations in a range of sectors. This week will be a key opportunity to discuss how China's macroeconomic imbalances and industrial overcapacity can affect our economies. We'll also discuss our responses and the approaches that we're taking to raise these concerns directly with China. It's critical that we and the growing number of countries who have identified this as a concern present a clear and united front. I'll now be glad to take your questions.
First question will go to Victoria Bloomberg.
Thank you. Secretary, I had a couple of questions on the Russian assets. You talk about, securing Ukraine in the medium to long term, Ukraine's position. Could you give us maybe a more specific sense of timing for how long you think this money that you're discussing right now could help Ukraine for? Is it just through 2025 or longer? And then do you have a preference as the US on how this money should be spent? Do you think it should be for defense, budgetary assistance, or is it something that you're negotiating right now? Thank you.
So the United States has provided direct budget support, and the Europe is provided support then plus IMF support that I think takes Ukraine through 2024, but the need is likely to be there in 2025 and beyond. And the assets that have been mobilized really present a potential source of support for Ukraine. You mentioned 2025, yes, but beyond that as well. So our hope would be to show that those assets do provide a viable stream of support in the years to come. So our focus is not just on 2025, but longer range than that. This is an assured source of financing, and it's important that Russia realize that we will not be deterred from supporting Ukraine for lack of resources. Let's see, excuse me. Oh, and how will they be spent? So, in general, to support Ukraine, both in terms of reconstruction and its military needs, but the details of that, if we're successful in gaining agreement on an approach that the leaders endorse in Apulia, that's something we will work out.
Next question will go to Dave Lauder, Reuters.
Hi, Secretary Yellen. Wondering if you can discuss a bit about what the discussions will be on the proposed global wealth tax. And can you kind of explain a bit more about your objections to that tax? President Biden has proposed wealth taxes on multimillionaires in the U.S. Do you need to keep that money at home? And also, what do you do in terms of the next steps on this? What will your message be here to G7 leaders? Thanks.
Yes, let me try to clarify. So it's clear that President Biden and I are committed to progressive taxation. We feel that the tax burden on high-income earners and corporations is too low, and we've made many proposals in the 2025 and earlier budgets to rectify that. And one of the proposals is, I would not call it a wealth tax, but it is an income tax that sometimes referred to as a billionaire's tax, although it would kick in at a somewhat lower level of income. But income in that proposal would be defined to include unrealized capital gains. So there's some similarity to a wealth tax, although it's not exactly a wealth tax. So it's not that I have any objection to imposing a reasonable level of taxation, and certainly a minimum level of taxation on very high-income individuals in the United States. Rather, it's that I'm not supportive of an international negotiation that would involve all countries agreeing to do it and to redistribute the proceeds among countries potentially based on climate and damage suffered from climate. And again, we are very concerned with climate, with both emissions reduction and adaptation. We recognize the needs of low-income and emerging market countries for financial support. I've spoken frequently at press conferences and for several years now about the efforts that we've undertaken to improve the flow of resources. And I do thank Brazil for its leadership of the G20. They're right to worry about an adequate flow of resources to support development, climate, and other pandemics and other needs. But I don't favor this particular formulation of how to go about doing that as an international tax negotiation.
Next question will go to Alan Rappaport with the New York Times.
Thanks, Secretary Yellen. Broadly speaking, the U.S. and the G7 have increasingly been turning to sanctions and tariffs to change the behavior or attempt to change the behavior of Russia and China, but so far there's been limited or mixed success. Does the G7 still have the economic might to influence other world powers? And do you worry that this turn to protectionism and expanded use of these tools could be reaching the point of diminishing returns?
Well, I feel that as long as Russia continues its brutal invasion of Ukraine and we continue to face a threat that Russia poses to Europe and to democracies more broadly, that it's essential that we use all of our tools, particularly our sanctions tools, to try to crack down on two things, both Russia's ability to earn the revenues that it needs to prosecute this war, which we've done in part through imposing the price cap, and also we need to restrict and curtail to the best of our ability Russia's ability to obtain the goods it needs to support what is now an all-out economic effort to build up, rebuild, and strengthen its military complex. And China appears to be a significant source of goods to Russia that are critical to this effort. And I do feel it's appropriate for us and for the G7 and our partners working together to use the tools that we have to attempt to restrict that trade. And the executive order that the president signed several months ago is a key tool. It enables us to impose secondary sanctions on financial institutions that are facilitating this trade. We've not yet sanctioned any financial institutions. This applies not just to China, but to any country that is facilitating this trade. And I believe we have the possibility of using this tool somewhat more aggressively. And I think it's appropriate, given the stakes for Europe, for our democracies, for the rules-based multilateral system, to use the tools we have to impede those flows.
Next question goes to Brendan Peterson with Punchbowl.
Thanks, Secretary Yellen. The U.S. House of Representatives is expected to pass a bill today that would restrict the Federal Reserve's ability to issue a central bank digital currency or digital dollar. First, are you concerned about this legislation to restrict the Fed in this way? Do you see public benefits to a central bank digital currency that the U.S. could lose if this is passed? And second, Republicans like to say that a digital dollar could be a surveillance state nightmare, letting the government spy on transactions. Do you see that as a potential risk of a CBDC?
So I believe the decision to issue a CBDC or other form of digital central bank-supported payments is one that involves not just the central bank, but also the broader government, and it's appropriate for Congress to play a role. This is something that many countries are considering. No decision, to the best of my knowledge, has been made either by the Federal Reserve, nor has the administration taken a particular position on this, but we are definitely in favor of payments innovations, and this is something we will be discussing at the G7. There are a rich set of innovations taking place in the payment system that could facilitate faster payments, more efficient cross-border payments, safer payments, promote financial inclusion. CBDC might be one, but there could be other ways of accomplishing the same things. I do think responsible innovation that speeds up payments, makes them safer, enhances cross-border transactions. This is something that's valuable for the United States and for other countries, and there's a lot of innovation taking place in this space. So I'm not familiar with the details of this legislation, but it's something that I think Congress should be looking at with the objective of enhancing welfare in this space.
Next question will go to Andy Doran with Wall Street Journal.
Hi, Secretary Yellen. Two questions. One is on, you mentioned in your opening remarks the need for a united front on confronting Chinese overcapacity, but you also mentioned that many European leaders share your concerns. I guess I'm just wondering what else you're looking for in terms of achieving united front, and why to what extent does a united front not currently exist in that space? And then my other question is on the dollar and its strength. Obviously, the dollar is very strong right now as people kind of change their expectations about the Fed. How do you view countries, including Japan, that are worried about the dollar's strength, and is it appropriate for Japan and potentially other countries to take steps to protect their currency given the trajectory of the dollar?
Okay, let's see, starting with overcapacity and the need for a united front. I think many countries share a concern over the broad macroeconomic and industrial strategy that China is pursuing. It's a strategy that has implications for the trade patterns and likely evolution of trade imbalances, both in the United States, in Europe, and in many countries around the world. Recently, as I mentioned, Chancellor Scholz, President Macron, President von der Leyen, but it's not just advanced countries. India, Mexico, South Africa, other countries are concerned that overcapacity in China, which is subsidized, so firms in China that have overcapacity are not going to go out of business. Instead, they're going to dump the products that they're producing in global markets in ways that drive down prices and drive out of business, bankrupt firms in the United States and other countries that wish to have viable clean energy sectors. And I think this is a practice that we're not willing to suffer. We believe strongly that both semiconductors and clean energy are sectors that are strategic, have spillovers that are positive over the medium to long run for jobs, for our economy. We're not willing to be completely reliant on China as a provider of these goods. We want supply chain resiliency. These sentiments are broadly shared. And I'm simply saying, not that all these countries need to carefully coordinate their policies, but we need to stand together and send a unified message to China so they understand it's not just one country that feels this way, but that they face a wall of opposition to the strategy that they're pursuing. And so this is something we'll discuss, but we're not trying to coordinate policy in a very fine way. Different countries will use different approaches. On the strong dollar, this partly reflects interest rate differentials and market views on the likely path of interest rates in different economies. As a general matter, the view that we've expressed, the Biden administration has expressed on exchange rates, is that it's appropriate for large market economies to have market-based exchange rates, and that movements in exchange rates to a large extent reflect differences in fundamentals across countries. And we believe that intervention should be rare. When it occurs, it should be communicated in advance, and if it occurs, largely be a response to volatility in currency markets. So this is not to say that exchange rate movements don't have impacts on economies, but intervention is not a tool that we think should be used in any routine way at all to address the impacts.
Next question will go to Claire Jones with the FT.
Thanks a lot. What sort of actions could the US and the G7 take should Israel decide to carry out its threat to cut off Palestinian lenders' access to their Israeli correspondent banks and continue to withhold tax revenues collected on the Palestinian Authority's behalf? Thank you.
So this is something, as I indicated, I'm quite concerned about. I wrote several months ago a letter to President Netanyahu about the economic situation in the West Bank. And as I said, I believe it would create a humanitarian crisis in due course if Palestinian banks are cut off from Israeli correspondence. Certainly this is a view that we will voice. I expect that other countries, this may be something we discuss in the G7 as well. I expect other countries to express concern about the impact of such a decision on the West Bank economy. I think this would have a very adverse effect also on Israel. So I want to leave it there for now, that we will express our concerns and try to do all that we can diplomatically to ensure that this arrangement continues.
And the last question will go to Filippo Santelli with La Repubblica.
Hello, thanks, Secretary. On the proposal to pull forward future interest earnings on Russian assets, I understand there are at least two major concerns about this option by European countries. First, on the duration of the plan, because a 50 billion loan would involve blocking the assets for 15 to 20 years. And second, possibility of Russian retaliation, having Moscow very recently seized assets by Italian and German banks. So how are you addressing those concerns in your meetings with the colleagues, and in which way is the US willing to adjust its proposal to reach a deal? Thanks.
So the details of the proposal have not been decided. We are looking for general agreement on the concept, and if we're able to obtain broad agreement on the concept, we'll spend the next several weeks leading up to the Leaders' Summit in Apulia to discuss details. 50 billion is a number that's been mentioned as a possible number that could be achieved by this, but there hasn't been a decision on an amount. And I don't believe, as a general matter, that it's necessary to agree to block the assets until the money is paid back. There could be a peace agreement. We would hope that there is a peace agreement. In the course of such an agreement, decisions could be made for Russian compensation of Ukraine. Some of those proceeds could go to paying back the money, but I don't think this would involve a hard, firm requirement. There's not the need for that to keep the assets immobilized. On the other hand, the G7 leaders did commit to keep those assets immobilized until Russia has paid the amount that Ukraine is due for the damage that it's caused. So the prospects that, at least for several years, they will remain immobilized remain pretty high.
That concludes today's press conference. Thank you all for joining.